Hello everyone, it's me, Frederick Gabriel Digimari, and today we will be tackling the topic property, plant, and equipment. So come and join me as our group tackles the topic for today. So here are the reporters for today's video. Me, Frederick, Aliyah, Carolyn, Nave, and Abigail. But before we start our topic, let us first identify our learning objectives for the day. First one, identify the audit objectives for PPE and related accounts. Second, explain the primary substantive audit procedures for property, plant, and equipment and related accounts. Third, identify assertions and addressed by audit procedures for PPE and related accounts. And lastly, prepare a lapsing schedule for a PPE. I'll be the first presenting the topic, property, plant, and equipment. So, property, plant, and equipment refers to tangible assets held by an entity for use in the production or supply of goods or services, for rental to others, or for administrative purposes. Property, plant, and equipment typically represents a significant portion of an entity's non-current assets and requires careful planning and analysis before acquisition. So when planning the audit of property, plant, and equipment, auditors focus on its significant impact on the statement of financial position and expect relative stable balances over time. They typically assess control risk at a high level and conduct thorough substantive tests, emphasizing significant additions and disposals and analytical procedures to verify depreciation provisions. Additionally, auditors gather evidence related to depreciation expense, accumulated depreciation, lease expense, impairment loss, and repairs and maintenance expense. Our group will no longer be discussing Chapter 18 of the Property, Plant, and Equipment topic, since we will be focusing on Chapter 19. So please refer to these videos if you want a more detailed explanation about property, plant, and equipment. However, I would still be showing to you the summary of audit procedures classified as per assertions. The first assertion that we have is existence or occurrence. So, the primary audit procedure for existence or occurrence is the reconciliation of general ledger with sub-ledger. Then, examination of additions and disposals, which includes retirements. Then, physical inspection of major additions of property, plant, and equipment, and perform analytical procedures for property, plant, and equipment and its related accounts. This may include lease expense, depreciation expense, accumulated depreciation, repairs and maintenance, property taxes, property insurance, and etc. So, for completeness, we have reconciliation of general ledger with sub-ledger, physical inspection of major additions of property, plant, and equipment, analysis of lease, repair, and maintenance account, perform analytical procedures for property, plant, equipment, and its related accounts. Then, for valuation and allocation, we have examination of additions and disposals, which includes retirements. Then, analysis of lease, repair, and maintenance account, test provision for depreciation or depletion, examination of impairments of property, plant, and equipment, perform analytical procedures for property, plant, and equipment, and its related accounts. Moto ang gipakisgot ganina. Katong lease expense, depreciation expense, then rights and obligation, examination of additions and disposals, which includes katong for retirements, then examination of proof of ownership of property, plant, and equipment. So, sa presentation and disclosure is to evaluate financial statement presentation and disclosures for property, plant, and equipment and related revenue and expense account. And for classification, analysis of lease, repair, and maintenance account. Then for accuracy, test provision for depreciation or depletion. So we will now discuss Chapter 19. So I was tasked to discuss the cost of machinery when purchased, swap befit COD. So first we have for S is non-refundable sales tax. So this refers to the tax paid on the purchase of machinery or equipment that cannot be refunded. Then for W, Cost of water device to keep machine cool. So this includes the expenses associated with installing and operating a water cooling system to maintain optimal temperature levels for the machinery. Then for third A, cost of adjustment to machinery for operational efficiency and to increase capacity. So these expenses covers any modifications or improvements made to the machinery to enhance its performance and increase its capacity. Then fourth, C, construction of base. So this involves building a sturdy base along with safety rails and platforms surrounding the machine to ensure safe operation and accessibility. Then P, purchase price. This is the total amount paid to acquire the machinery or equipment, including any taxes and fees. Then sixth, insurance while in transit. This covers the cost of insuring the machinery during transportation from the seller to the buyer's location. Then, freight handling, storage, and other costs related to the acquisition. So, these expenses encompass the various costs associated with transporting, handling, storing, and other related expenses incurred during the acquisition process. So for I, installation cost including site preparation and assembling. So this includes expenses related to preparing the site for installing the machinery as well as the actual assembly and installation process. So for 9, cost of testing and trial run and other costs necessary in preparing the machinery for use. So these costs cover activities such as testing, trial runs, and other necessary preparations to ensure the machinery is ready for use. Then, fees paid to consultants for advice on acquisition of the machinery. So C. So this involves paying consultants or advisors for their expertise and advice regarding the acquisition of the machinery. Then U, unloading charge. So this refers to the cost incurred for unloading the machinery from the transportation vehicle upon delivery. Then last, D, initial estimate of cost of dismantling and removing the machinery and restoring the site on which it is located. So this includes the estimated expenses associated with dismantling and removing the machinery from its current location as well as restoring the site to its original condition. It is important to consider other costs when purchasing machinery and how these costs should be treated. In the book, there are 3, which is old and new installation cost, non-recoverable purchase tax, example, value-added tax, and lastly, royalty payment on machines. So, there are 2 scenarios given for the old and new installation cost, which is the machinery is moved to a new location and the machinery is removed and retired. So, for the machinery is moved to a new location, the depreciated old installation cost is expense and the new installation cost is charged to the new asset. While if the machinery is removed and retired, the depreciated old installation cost is expense and the new installation cost is charged to the new asset. In addition, the removal cost is also charged to expense. So for non-recoverable purchase tax, example, value-added tax, for VAT registered entities or value-added tax registered entities, value-added tax on purchases isn't part of the asset's cost but is recorded as input tax, which is offset against output tax. And as for non-VAT entities, VAT paid on acquiring property, plant, and equipment cannot be recovered. Hence, it is included in the capitalized cost of the asset rather than treated separately. So, if the entity does not state whether it is a VAT or non-VAT registered, then the entity is presumed to be a VAT registered entity. For royalty payments on machines, royalty payment on machines purchased should be accounted as follows. So if it is based on units produced, the expense should be included as part of manufacturing overhead. And if it's based on units produced and sold, then the expense should be reported as selling expense. So let us proceed to the illustration. So Peter Company acquired a new machine. Details of the acquisition are as follows. Cash paid for machine including value added tax of 60,000 totaling to 560,000. Royalty payment based on units produced 19,000. Cost of transporting machine 15,000. Cost of installation by expert fitter 40,000. Labor of testing machine 20,000. Materials used and damaged as a result of testing the machine 10,000. Repair cost of new machine damage in the process of installation 12,000. Cost of training for personnel who will use the machine 25,000. Cost of safety rails and platforms surrounding machine 50,000. Cost of water device to keep machine cooled 70,000. Cost of adjustment to machine to make it operate more efficiently 57,000. Estimated dismantling cost be incurred as required by contract 65,000. Cost of removing old machine 10,000. Loss on premature retirement old machine 120,000. Gratuity paid to operator of old machine who was laid off 20,000. So before proceeding to the solution, let us first identify what should be included and what is not to be included in our solution. So cash paid for machine including value added tax of 60,000. This should be included. And the only entries that should not be included are royalty payment based on units produced, repair cost of new machine damage in the process of installation, cost of training for personnel who will use the machine, and cost of removing old machine, loss on premature retirement old machine, gratuity paid to operator of old machine who was laid off. So the explanation for royalty payment based on units produced is the royalty payment on machine produced should be included as part of manufacturing overhead because it was based on units produced. So manufacturing overhead ang royalty payment based on units produced. So for the repair cost of new machine damage in the process of installation cost it should be under the repairs expense. Then for cost of training for personnel who will use the machine is for training expense, and cost of removing old machine is kanang and the cost of removing old machine and the loss on premature retirement old machine is charged to loss on retirement of the machine. Then for gratuity paid to operator of old machine who was laid off it is charged to expense. So knowing all that, let us proceed to the solution. So cash paid for machine excluding VAT, value added tax for 560,000 minus 60,000. Ngano man dili man nato i-include ang value added tax. Di ba na dire? For VAT registered entities, the value added tax on the purchases is not capitalizable as part of the cost of the item required, but debited to input tax to be offset against the output tax. So it should be put in the input tax na i-offset sa output tax. So mo na dili i-include ang 60,000. Then cost of transporting machine 15,000, cost of installation by expert fitter 40,000, labor of testing machine 20,000, material used and damaged as a result of testing the machine 10,000, cost of safety rails and platforms surrounding machine 50,000, cost of water device to keep machine cool 70,000, cost of adjustment to machine to make it operate more efficiently 57,000, estimated dismantling cost be incurred as required by contract 65,000, which totals to 827,000. That's it for my part. Thank you everyone.
Good day everyone, my name is Alea Omanton and today I will be reporting about the costs chargeable to land and building as part of our property, plant and equipment topic. So here are costs that are chargeable to land. First, we have purchase price, money ang amount sa money the atong gibayad to acquire the land. Next is the survey cost, mo na atong expense for professional surveyor na mo-survey sa atong land for mapping or measurement. Next, cost to register the land and other costs of transferring the title in the name of the buyer. So, muna atong fees for legally transferring the ownership to the buyer. Then, legal fees and other expenditures for establishing clean title. Akip na ani ang other legal procedures or legal process na atong mabayaran to ensure na wala na yung mga issues or wala na yung mga sabit sa atong ownership na land. Next, the commission cost paid to brokers or agents. So, muna ang atong ihatag na fees sa mga real estate agents or brokers that help us to acquire, to find, or to buy that land. And then, next, cost of clearing unwanted old structures, less proceeds from salvage, excluding demolition cost. So, ang kaninga cost is atong expenses in removing any existing building sa atong land na gi-acquire minus sa atong money na ma-make from salvaging materials from those old structures. Sunod, liabilities on the land assumed by the buyer. Example, mortgages, encumbrances, and interest on such mortgages assumed by the buyer. So, ang apil ang mga debts or obligations na related sa land na gi-acquire na sa buyer. Mga example, mortgages. Then, you also have unpaid real property taxes on the land up to the date of assumed by the buyer. So, any property taxes po na related sa land na agreed na si buyer ang mo pay. Next, you have payments to tenants to convince them to vacate the premises, mga costs na to ana, and then next ang cost to relocate or reconstruct property of others occupying the land as to obtain ownership. Ganing mga cost kay if naa pa bitaw other people's property or building ana na land, so makagasto jud ka to move those property or to just rebuild it for your ownership sa buyer. So mga cost ana are chargeable to land. So, another cost that are chargeable to land is option cost of the land acquired. Kaning option cost or option price is the price to be paid by an investor for an option contract based upon the security of the underlying asset and the time left until the option expires. So, kani is ang cost nato for having the chance to buy or sell a property or something in the future. So, kaning option cost is capitalized as part of the cost of the land only if the land is acquired. Pero if the land is not acquired, it is treated as expense. For earnest money deposit, ang earnest money deposit is down payment nato ini purchase nato sa isa ka property. So, kaning earnest money deposit shows po sa it shows seller how we are serious in purchasing this particular na property. So, it is capitalizable cost pod of the asset acquired or of the land. And then, cost of permanent improvement such as draining cost, cost of filling the land, or cost of grading and leveling. So, mo ni mga cost or expenses in the improvement of the land or preparing the land for use. So, naapod tayo important information that we need to take note. For land improvements, nandiyan duha klase. There is land improvement subject to depreciation and not subject to depreciation. Not subject to depreciation, my example ani are cost of surveying, clearing, grading, and leveling, and subdividing. So, they are not subject to depreciation because they're considered as part na jud sa initial investment and of the land, and then they are treated as capitalizable cost of the land. On the other hand, those are subject to depreciation, for example, fences, water systems, drainage systems, sidewalks, and pavements. And ang treatment ani nila is if it is originally part of the plan and of the building, then it is considered as part of the building and is not depreciated separately. Pero if it is not part of the original plan of the building, then it is treated only as land improvement. Next, we have the special assessment. And the special assessment is costs or expenses na related sa improvement or services of the land. For example, kaning mga new roads or utilities, and it is treated as capitalizable cost of the land. Last, we have real property tax. Kaning real property tax should always be expense, but acquired na by the buyer, then it is capitalized as part of the cost of the land. Another is costs chargeable to building when purchased. So, example ani, first is we have purchase price, then legal fees and other expenses incurred in connection with the purchase, liabilities on the building assumed by the buyer, including unpaid real property taxes on the building up to the date of acquisition assumed by the buyer, then renovation and remodeling costs on the building to make it suitable for its intended use, and payments to tenants to convince them to vacate the premises. So, they are kind of self-explanatory and naproduce similarity sa costs that are chargeable to land. Kalahian la is this is chargeable to building when purchased. Naapod the illustration of the land account and building account, ilang classification in the statement of financial position. And you can just read through it for familiarity. Next, the cost of building when constructed. So there are examples of costs that are chargeable sa building when constructed. First, we have construction costs that will include materials, labor employed, and overhead incurred during the construction, building permit and license, architect fee, fees paid for supervision, excavation costs, expenditures for service equipment and fixtures made a permanent part of the structure, expenditures incurred during the construction period such as interest of construction loans and insurance, then cost of security fences while construction and other temporary buildings to house construction materials and tools, and cost of demolishing old building less proceeds from salvage. So we need to familiarize these chargeable costs of building when constructed. Napod tayo special notes in relation to the chargeable cost of building when constructed. In first, insurance. If we take insurance during the construction, then it is part of the cost of the building. But if we did not take the insurance during the construction and after that na-claim for damages, then the damages shall be treated as expense. Then for building fixtures, for example, shelves, cabinets, or partitions, if it is immovable, it is part of the cost of the building. But if it is movable, it is charged to furniture and fixtures and depreciated over their useful life. Then we have savings or loss on construction not recognized as an addition or deduction to the cost of the self-constructed asset. So in simple terms, if the company saves money during the construction, they will pay less depreciation expense over time. So it is beneficial to their finances. But if they incur loss during the construction, they will end up paying more depreciation expense in the long run. So it will affect their financial performance negatively. Acquisition of land and a building. Ang total cost sa property na imong gi-acquire should be allocated sa land and the building sa acquisition date and based sa ilang relative fair value. If imo na siya i-acquire, could be either to demolish or to use the building, dili siya maka-affect sa fair value na gamiton and allocate sa cost. Ang entity ay mo acquire of land with one or more existing building, either to demolish the old building and to construct a new building, meaning redevelopment, or they could use the building initially as owner-occupied property and i-demolish in the future and replace na po nila og new building. So, in here, natay different scenario in acquisition of land and building. The first scenario is the old building is unusable and likely to be demolished right away. The fair value of the building is insignificant, so the old building is in bad shape na. So, ang treatment sa ilang purchase price is, the purchase price is allocated only to the land and ang part sa purchase price is not attributed to the building. And the treatment of other common costs on the acquisition or other costs nimo sa pag-acquire ana na property would just be charged sa land. For the net demolition cost, imong cost sa pag-demolish sa old building would be subtracted from your total expenses. And then if na kay plan to to construct na po the new building, the expenses of the construction would be treated separately. So another situation is when old building is usable in the meantime, and the old building will be classified as either property, plant and equipment, inventories, investment property at cost model, or at fair value model. So if the old building is usable in the meantime and it is classified as PPE, ang treatment sa purchase price would be split between the land and the building based on their relative fair value. And the treatment of other costs would be similar tapos sa purchase price na i-allocate nimo between the land and the building based po sa ilang relative fair value. And then for their net demolition cost, the cost of demolishing the old building would be treated as kana cost pod in constructing a new building. Next, if the old building is usable in the meantime and is classified as inventories, ang treatment sa purchase price would be the land and the building would be classified as one or grouped together under inventories. And then the treatment of other costs would be, it would be added to the total cost of the land and the building na gi-classified nato as inventories. And at the same way, the demolition cost would also be added to the total cost of land and building of the old building that we considered as inventories. Another situation is when old building classified as investment property at cost model. So, cost model meaning historical cost minus the depreciation. Ang purchase price treatment ani would be, we will split the purchase price between the land and the building, and each would be recorded separately based sa ilang fair values. Ang treatment po sa other costs or their common costs will be similar to the purchase price na i-allocate po nato ang additional cost between the land and the building based on their fair values. For the net demolition cost, if there is a new building being constructed, ang cost ani would be treated as an investment property. Next is if the old building classified as investment property at fair value model na po, meaning the value or revalues properties to their current market. So the treatment of the purchase price would be the land and the building were considered together as one item under the investment property. So the treatment of other costs or their common costs would be just additional sa overall cost of the land and the building that is treated as investment property. For the net demolition cost, if a new building is being constructed, similar na po sa ganiha na its cost will be treated as part sa investment property. Lastly, last scenario, if the old building is usable but likely to be demolished. So the purchase price treatment would be, the purchase price would again split between land and old building, and the building's cost would be charged as loss. So in here, the building's cost will be charged as loss because in this scenario, there is a decision na i-demolish na ang building right away. It means that the building cannot generate future economic benefits na in the business. So i-charge na to ni as a loss. For the treatment of other costs, it is similar sa purchase price again, and then we allocate the additional cost between the land and old building, and then katong portion pod sa building will be charged as loss. For the net demolition cost, any cost for demolishing the old building would be considered as part na sa cost of constructing the new building. For the first illustration 1, the situation is old building will not be demolished. So on March 1, 2021, Abitaide Corporation acquired land and building by paying 8 million pesos and assuming a mortgage of 1 million pesos. The building will be used by Abitaide Corporation as its head office. For the cost, not a draining cost and filling the land, 35,000. Cost of option of the acquired properties, 20,000. Escrow fees on the properties acquired, 11,000. Broker's fee on the properties acquired, 10,000. Cost of relocating and reconstructing the property belonging to others in order to acquire the properties, 23,000. Registration fees and transfer of title, 13,000. Legal fees for contract to purchase land, 11,000. Cost of windows broken by vandals, 22,000. Cost of grading and leveling the land 8,000, title insurance 15,000, new fence surrounding the property 40,000. So for the requirements, determine how to account the above costs under each of the following cases. Case number 1, assume that on the date of acquisition, the land and building have fair values of 9 million pesos and 3 million pesos respectively. For case number 2, assume that on the date of acquisition, the old building has a minimal fair value. So to solve for case number 1, na assume that on the date of acquisition, the land and building have fair values of 9 million pesos and 3 million pesos respectively. So, ang total na purchase price pag acquire nato sa property is 9 million pesos. 8 million pesos og assuming na mortgage of 1 million pesos equals to 9 million pesos. Then for the purchase price, ato ni si Jang i-allocate based sa fair value sa property na atong gi-acquire. So sa land na atay fair value na 9 million and for old building na atay fair value na 3 million. So, for the land, ang 9 million na fair value be divided by 12 million, which is the total fair value of the properties acquired. So, natay 75%, and 75% of the total price pag-acquire nato sa land and building is 9 million. So, 75% of 9 million is 6,750,000. For old building, mura gihapon pod ang procedure natay fair value sa old building na 3 million and then divided by the total fair value which is 12 million and natay 25% and that 25% of the total purchase the total price sa pag-acquire nato sa land and building is 9 million and then 25% of 9 million will be 2,250,000. So next na cost na atong i-consider is a draining cost and filling the land. Ang kaning cost is directly related sa pag-prepare nato in acquiring the land and it is capitalized as part of the cost of the land only. So ang cost is 35,000 pesos. The next cost is the cost of option of the acquired properties. Kaning cost of option of the acquired properties na incurred ni to secure the option to purchase the properties. And ang pag-allocate nato ani is based pod sa fair value sa atong properties na na-acquired. For the land, naman tayo 75% and then for old building na po tayo 25%. So, ang cost of option of the acquired properties is 20,000. And para i-allocate nato sa land, the 75% of 20,000 is 15,000. And for old building, natay 25% and 25% sa total cost of option of the acquired properties, which is 20,000, is 5,000. Next, we have the escrow fees on the properties acquired. Ang kaning escrow fees are incurred as also part sa pag-acquire nato sa properties. Ang kanidiang escrow fees, mo ang instead na mohatag ta og money diretso sa seller, ang mohatag ta kwarta ngadto sa third party or sa escrow company na mao mo keep sa atong money or document. And ilas ang i-make sure na na-settle na tanan o sa ihatag pa ngadto sa seller. So, natay fees ana nila. So, i-allocate po na nato sa land and old building gamit ang ilang fair value. So, ang escrow fees na ay total na 11,000 and the 75% of 11,000 is 8,250 and for old building natay 25% the fair value and 25% of 11,000 is 2,750. Next is the broker's fee on the properties acquired. Ang kaning broker's fee is similar po sa escrow fee na incurred during the acquisition process. Kaning broker's fee is mo ni ang fee na atong ihatag ngadto sa real estate broker na nag-help nato to acquire or to buy the properties. So, ang total broker's fee on the properties acquired is 10,000 and ato po siya i-allocate sa land and old building based na po sa ilang fair value. sa land is 75%. 75% of 10,000 is 7,500. And for old building, natay 25%. And 25% of 10,000 is 2,500. Next, natay cost of relocating and reconstructing the property belonging to others in order to acquire the properties. Since naapay mga building na naapa sa land na atong i-acquire, natay cost in relocation of reconstructing the property aron ma-ato na or to acquire na both ang properties. So this cost is allocated both sa land and old building based na po sa ilang fair value. So ang cost of relocating and reconstructing the property costing 23,000 and pag-allocate ana based sa ilang fair value is 75% sa 23,000 is 17,250, and then for the old building the 25% of 23,000 is 5,750. Then, ang sunod na mga cost na atong i-consider is the registration fees and transfer of title, 13,000. Legal fees for contract to purchase land, 11,000. Cost of grading and leveling the land, 8,000. Title insurance, 15,000. These are all costs na capitalized as part of the cost of land only. So, naatay total cost or adjusted balance of land na 6,880,000 and for old building na 2,266,000. So, ang wala na nato gi-apil ani is ang new fence surrounding the property. It is because ang kaning new fence is not originally part of the plan. So, it is considered as land improvement na subject to depreciation. And then, wapo na ito gi-apil ang cost of windows broken by vandals since it is considered as expense and it is not part of the acquisition of the land and old building. For case number 2, assume that on the date of acquisition, the old building has a minimal fair value. Case number 2, ang old building daw has a little value na dili na nato siya i-consider as part of the main investment. So as you can see here, tanan cost is attributable sa land. For example, kaning purchase price, ang atong total purchase price is 9 million man. So allocated na tanan sa land. This purchase price sa land is 9,000 pesos. And other pod na common cost na attributable pod before sa old building will be allocated na lang to the land. For example, kaning escrow fees on the properties acquired, 11,000. Cost of option of the acquired properties, 20,000. Broker's fee on the properties acquired, 10,000. And cost of relocating and reconstructing the property belonging to others in order to acquire the land na 23,000 pesos. Then, di po na to kalimtan ang mga cost na directly attributable sa land jud. For example, kaning draining cost and filling the land amounted to 35,000. Registration fees and transfer of title, 13,000. Legal fees for contract to purchase land, 11,000. Cost of grading and leveling the land, 8,000. Title insurance, 15,000. So, ang total cost sa land or the adjusted balance of land is 9,146,000 pesos. Ang wala na po nato gi-apil ani is kaning new fence surrounding the property because it is charged as land improvement na depreciated over time. And then kaning cost of windows broken by vandals na charged to expense since di ba siya part sa pag-acquire sa property. For illustration number 2, the old building will be demolished. On March 1, 2021, Rosemary Reyes Corporation acquired land and building by paying 6 million pesos and assuming a mortgage of 1 million pesos. The old building will be demolished for the construction of a new building. So here are the costs. For special assessments, 4,600. Cost of option of the land not acquired, 7,000. Cost of grading and leveling the land, 8,000. Cost of relocating and constructing the property belonging to others in order to acquire the properties, 23,000. Registration fees and transfer of title, 13,000. Title insurance, 15,000. Liability insurance taken during construction, 12,000. Legal fee for title investigation, 25,000. Materials used in construction, 600,000. Labor paid for the construction, 300,000. Other overhead costs incurred as a result of construction, 220,000. Safety fence around construction site, 35,000. Driveway, parking bay, and safety lighting, 19,000. Saving on construction, 27,000. And cost of changes during construction to make new building more energy efficient, 50,000. The requirements are determine how to account the above costs under each of the following cases. For case number 1, assume that on the date of the acquisition, the building is usable but likely to be demolished right away, and the land and building have fair values of 3,500,000 and 500,000 respectively. For case number 2, assume that on the date of the acquisition, the old building is unusable and has minimal fair value. To solve for case number 1, since ang situation is the old building will be demolished man, so naa jud tay cost na attributable for the construction of new building. As you can see here na nakabutang na new building. Ang total na amount na pag-acquire nato sa atong property na land and building is 7 million. Ning pay tag 6 million pesos and a mortgage of 1 million pesos. So, inig-allocate nato sa purchase price, it is also based again on their fair value, the fair value of the property. For the land, for case number 1, nakabutang nga rin nga fair value sa land would be 3,500,000. And for the old building is 500,000. So, ang fair value sa land na 3,500,000 divided by sa total fair value na 4 million would be 87.5. So, 87.5% of the total cost, which is 7 million, is 6,125,000. So, mo na ang purchase price na attribute to the land based on the land's fair value. Sa old building pod, ang fair value sa old building is 500,000 divided by sa total fair value of the property acquired na 4 million is a total of 12.5%. And 12.5% of the total cost na 7 million is 875,000. So, mo na ang purchase price na attributable to the old building. The next na to na i-consider na cost is special assessment. Ang special assessment is part of the improvement or the services that are related sa land. For example, is kanang magasto inig himong new roads or utilities na that are beneficial sa land. So, it is part of the cost of the land only. So, ang total cost of special assessment is 4,600. Next, you have cost of grading and leveling the land. Kanang cost is the cost of preparing the land for construction. So, similar sa special assessment, it is also directly attributable to land alone. Next, you have cost of relocating and reconstructing the property belonging to others in order to acquire the property. So, mo ni ang magasto nimo inig pa-move nimo sa mga property nga naa pa sa building or pag-reconstruct nimo sa mga property for your ownership. So, it is both attributable to land and old building. So, i-allocate nimo sa land and old building based na po sa ilang fair value. So, ang total cost of relocating and reconstructing the property is 23,000. So, ang fair value sa land is 3,500,000 divided by 4 million. We have 87.5% and 87.5% of 23,000 is 20,125. And for the old building pod na fair value na 500,000 divided by the total fair value na 4 million, mo come up to 12.5% and 12.5% of the total cost of relocating and reconstructing the property na 23,000 is 2,875. So, mo na ang allocated cost of each property. Then, you also have registration fees and transfer of title, 13,000, and title insurance, 15,000. These are, again, directly attributable to land alone. Then next, you have liability insurance taken during construction. It is the liability insurance taken during construction since this is the insurance taken during the construction process. So, it is attributed as part of the cost of construction of the new building, amounting to 12,000. Then, you have legal fee for title investigation na directly attributed po sa cost of the land alone. Material used in construction are part of the construction process of the new building, so it is capitalized as part of the cost of the construction of new building. Kung amount ninja is 600,000, and then in the same way kani pong labor paid for the construction na nag-amount of 300,000, and other overhead cost incurred as a result of construction 220,000, safety fence around construction site 35,000, cost of changes during construction to make new building more energy efficient 50,000, and it will also add ka ng future economic benefit sa building. So all of these are appeal sa construction process, so it is chargeable as a cost of the construction of the new building. So ang total adjusted balance of land is 6,210,725. For the old building natin is 877,875. However, kaning allocated cost sa old building is charged to loss. It is because if the old building is demolished, dili na siya, ang iyang value is di na ma-recover and dili na valuable. So, i-write off ang value sa old building as a loss, and will also be recorded as a loss in the company's financial statement. Then, the adjusted balance or the total cost pod of new building is 1,217,000. For case number 1, wala na to gyapil ang driveway, parking bay, and safety lighting because it is charged as land improvement. So, it is depreciated over time kay wala man jay labot sa original blueprint of the building. Then, the cost of option of the land not acquired is charged to expense since, di ba, attributable na siya as part of the cost sa property if the land is acquired. So, if not, it is just charged to expense. Then, the savings on construction is ignored or overlooked in the computation of its inconsistent nature, and because it will reduce the overall cost of construction. For the case number 2 of the same situation or the same problem, assume that on the date of acquisition, the old building is unusable and has minimal fair value. So, ang old building daw has minimal fair value, or ang cost sa old building will be written as an expense because diwa naman siya mag-produce or mag-generate of economic benefit. So, as you can see here, wala na yung mga cost na attributable sa old building. It is because wala na siya value. So, ang mga cost is either allocated sa land or the construction of new building. First, sa purchase price, we have total of 7 million, and i-allocate na ni siya sa land alone because wala na value ang old building. The purchase price, 7 million, and at the same way, kato po mga common cost na attributed po dapat sa old building is dapat attributed na lang sa land. For example, ana is kanang cost of relocating and reconstructing the property belonging to others in order to acquire the properties amounted to 23,000. So, kana po mga cost na related sa preparation sa land is still capitalized as part of the cost of the land. For example, kaning mga special assessment amount is 4,600. We have cost of grading and leveling the land, 8,000. Registration fees and transfer of title, 13,000. Title insurance, 15,000. And legal fee for title investigation is 25,000. All of that are originally kanang capitalized as part of the cost of the land and still i-attribute lagi hapon sa land. And then for the new building, napod tay mga cost na related sa preparation for the construction of the new building and are capitalized as part of the cost of constructing the new building. Sa ani is kaning liability insurance taken during construction, 12,000. Then others are material used in construction, 600,000. Labor paid for the construction, 300,000. Other overhead costs incurred as a result of construction, 220,000. Safety fence around construction site na 35,000. And cost of changes during construction to make new building more energy efficient is 50,000. All of these are part sa construction process, so dapat ba i-capitalize as part of the cost of the new building. So, ang total cost or the adjusted balance of land is 7,088,600, and for the new building 1,217,000. Ang driveway, parking bay, and safety lighting is dili gihapon included because it is charged as land improvement since it is not part of the blueprint of the building. And then the cost of option of the land is not acquired. Not acquired is charged to expense kay ang dapat pa na i-consider as part of the cost sa property are katulad mga land na na-acquire. And then savings on construction is ignored in the computation is for the same reason sa case number 1. What if the entity will acquire the property sold sa current reporting period, and then the intention is to demolish the old building and replace it with the new building? The entity will not use the old building prior to its demolition. So the new building can be used as either property, plant and equipment, or inventory or investment property. So if the new building will be used as the PPE, the cost of the new building would be construction cost plus the demolition cost. If a new building will be used as inventory, the cost of new building be allocated carrying value of the old building plus construction cost plus the demolition cost. So if a new building will be used as an investment property, the cost of new building be construction cost plus the demolition cost. So, sa po yung treatment sa carrying value of the old building. So, the carrying value of the old building, if the new building will be used as PPE, will be charged to loss on retirement. So, if the building is already retired from the company's book, it is no longer useful and write-off na nila sa company ang value sa old building adto sa books. And treated po siya as loss on the company's financial statement. So, ang carrying value pod sa old building, if the new building will be used as an inventory, is capitalized as inventory. Meaning, mahimo na siyang part sa imong expenses. Kay, gi-capitalize naman mo ang old building as part sa imong inventory. So, eventually, if masold to nga inventory, mahimo na po siyang part sa imong cost of goods sold. And then, the treatment of the carrying value of the old building, if the new building will be used as investment property, would also be charged to loss on retirement since ang old building is no longer useful. Bali, ang treatment sa carrying value of the old building and the cost of new building sa PPE is the same as investment property. For illustration 1, the situation is when new building will be used as property, plant, and equipment. On January 2 of the current year, Kylie Corporation purchased a parcel of land with an old building for 4 million pesos. The appraised values of the land and building are 3 million pesos and 2 million pesos respectively. The building is estimated to have a remaining useful life of 5 years. On April 1 of the current year, the company began demolishing the old building to make room for a new one. The construction ended on December 31 of the current year. The following additional costs are incurred. Maning additional costs, mga cost of survey for 40,000, demolition cost 100,000, construction cost of the new building 2 million, building permit fees 120,000. Assume that the new building is to be used as property, plant, and equipment. For the requirements of the problem, determine the following. Number 1, cost of the land and old building as property, plant, and equipment at initial recognition. Number 2, loss on retirement of old building to be recorded in the profit or loss. Number 3, the cost of the new building. So, to answer the problem number 1, where the new building will be used as property, plant, and equipment, kinahanglan sa nato i-answeran ang first requirement, which is to find the cost of the land and old building as property, plant, and equipment at initial recognition. So, namantay ang total price sa purchase nato aning land and old building is 4 million pesos. And napod are given pod ang appraised value sa land, which is 3 million, and the old building, which is 2 million. And the total appraised value of 5 million. So, unsaon man nato pag-allocate sa total cost na purchase sa land and old building. So, atong gamiton ang appraised value. So, ang appraised value of land is 3 million divided by 5 million at a ratio na 3/5. 3/5 of 4 million is 2,400,000. And at the same way, sa old building, maupod, natay 2 million appraised value over 5 million. Atong ratio is 2/5. And then 2/5 of 4 million is 1,600,000. So, ang purchase price na allocated sa land is 2,400,000. And then, napamampoy mga following na additional cost, 'di ba, na na-incurred. So, ang atong i-appeal ani is ang cost of survey or kanang fee na ihatag nimo sa professional surveyor sa mapping or measurement sa imong land. So, appeal na sa cost nga capitalized as part of the cost of the land. So, ang amount is 40,000. And the total cost of the land is 2,440,000. Sa pag-allocate po sa cost sa building, ang total cost allocated to building is 1,600,000 and wala na additional cost na allocated to the old building. For requirement number 2, we have loss on retirement of old building to be recorded in the profit or loss. Diba? Kay gi-held man nato siya as ang new building as PPE. So, ang carrying value of the old building will be charged to loss on retirement. So, pangita ko nato ang value ana. So, di ba na naman tayo cost of old building na gi-allocate sa old building which is 1,600,000. And then, ato siyang minusan sa accumulated depreciation ni Ja. So, ang to answer to compute sa accumulated depreciation natay 1.6 million, it is the cost of the building, and then 5 5 for divided by 5 for the remaining useful life of the building. I-times nato siya sa 3 months. 3 months it is because na acquire na purchase nato ang parcel of land with an old building on January 2 and then gi-demolish pod ang same old building on April 1. So from January 2, January, February, March, natay 3 months. So 3 months divided by or over 12 months. So ang answer ana is 80,000. Una na take carrying value of old building which is 1,520,000 and it is considered as loss on retirement. For requirement number 3, we will now find the cost of new building. So, in finding the cost of new building, if ang imong new building will be used as PPE, you just have to add the construction cost plus demolition cost, di ba? Motong rule sa kinahanglan. So, given man nga ang demolition cost, which is 100,000, and the construction cost of the new building na 2 million. However, napa may mga apelan nga mga fees or mga additional costs na kinahanglan nato bayaran. So, we have building permit fees na 120,000. And then the total cost of the new building is 2,220,000. Next is illustration number 2, where the situation is the new building will be held as investment property. So, ang basahon ang problem first. On January 2 of the current year, Jeff Corporation purchased a parcel of land with an old building for 4 million pesos. The appraised values of the land and building are 3 million and 2 million pesos respectively. The building is estimated to have a remaining useful life of 5 years. On April 1 of the current year, the company began demolishing the old building to make room for a new one. The construction ended on December 31 of the current year. The following additional costs are incurred. Cost of survey, 40,000. Demolition cost, 100,000. Construction cost of the new building, 2 million. Building permit fees, which is 100,000. So, assume that the building is to be held as an investment property. As you can notice na same na gihapon og problem and ang nakalahi ra is the pag-assume nato that the building is to be held na as investment property. So, ang requirement of this problem is number 1, cost of the land and all building as investment properties at initial recognition, and then loss on retirement of old building to be recorded in the profit or loss, and then last requirement is to find the cost of the new investment property. Actually, no, ang solution or ang treatment sa new building, if it is used as PPE or if it is used as an investment property, the treatment is just the same ra. So, to answer this, our requirement number one, cost of the land and old building. Pero as investment properties at initial recognition, same rapod of solution. The illustration number three, where the new building will be held as inventory. So the problem is, on January 2 of the current year, Manny Corporation purchased a parcel of land with an old building for 4 million pesos. The appraised values of the land and building are 3 million and 2 million pesos respectively. The building is estimated to have a remaining useful life of 5 years. On April 1 of the current year, the company began demolishing the old building to make room for a new one. The construction ended on December 31 of the current year. The following additional costs are incurred. The cost of survey, 40,000, demolition cost, 100,000, construction cost of the new building, 2 million, building permit fees, 120,000. Assume that the new building will be classified as inventory. Same as of structure sa previous na illustration from illustration 1 and illustration 2. The requirements are determine the cost of the land and old building as property, plant, and equipment at initial recognition. Then next, the loss on retirement of old building to be recorded in the profit or loss. Number three, the cost of the inventory. To answer problem number three, where the new building will be held as inventory, ang unang requirement is to find the cost of land and old building as property, plant, and equipment at initial recognition. So, simbakati nga mo no nga nganong balik-balik sa ining property, plant, and equipment at initial recognition and nganong kailangan pa man nato ni pangitaon. It is because kaning PPE at initial recognition will serve as the baseline of value of the asset and magamit throughout the whole computation of the new building that will be used as inventory. So, since ang requirement number one or ang cost of the land and all building as PP at initial recognition is the same of treatment and computation sa ang gidiscuss pag illustration number one, I will not discuss it again. So, proceed for the requirement number two, the loss on retirement of all building to be recorded in the profit or loss. Pangitaan to na to ang charge to loss and retirement sa inventory. The answer is 0. The carrying value of the old building is inventoriable cost. Diba ganiha? If if the new building will be used as inventory, the carrying value of the old building is not charged to loss on retirement, lahi ra sa PPE and investment property. This is because it will be used or it will be capitalized as inventory. Mahimo na diyang part sa imong expenses. So, pwede po siya mahimo ng cost of goods sold if na-sold na nimo nga inventory. So, the answer is 0. For number 3, requirement number 3 is to find the cost of the inventory. Total inventory na. So, to find the total cost of the new building, first, i-add na to ang allocated carrying value of the old building plus the construction cost and demolition cost. Diba mo na rule sa previous na discuss ini ha. So, let us find first the carrying value of the old building. So, the carrying value of the old building is 1,520,000. Diba? Ang kaning carrying value of the old building, ning come up taan din na answer, katong atong gi-minus ang accumulated depreciation sa cost na allocated sa building. So, ang cost na allocated sa building is 1,600,000 minus the accumulated depreciation na 80,000. So, carrying value of the old building is 1,520,000. Then, since nakabutang man sa rule, na-add po na to ang demolition cost amounted to 100,000 pesos and construction cost of the new building, which is 2 million pesos. And ato pong i-add nga re, ang kinahanglan nato bayran, which is the building permit fees na 120,000. And then, the total cost of the new building, or the cost of inventory, is 3,740,000. So, lastly, we have here the illustration that summarizes the acquisition of land and building at a single cost. There are common costs here. So, ang common costs are costs that are attributable both to land and the building. So, example, ana, our purchase price, unpaid property taxes up to the date of acquisition, brokers and agents commission, payments to tenants to induce them to vacate the premises, cost of reconstructing and relocating of property belonging to others, and escrow fees. So, ang kaning common cost, if ang building is unusable or has insignificant value, the common cost will be allocated solely or entirely to land. So, if ang common cost is allocated entirely to land na ay construction of new building ana. So, ang solution for the net construction cost is construction cost plus net demolition cost minus charge to new building. So, kung sa mabuhay treatment sa common cost if the building is usable and to be used by the company. So, will be allocated to the old building, and the old building is either PPE or investment property under the cost model, or inventory or investment property under the fair value model. So if PPE or investment property under cost model, i-split nato ang cost to between the land and the old building using the relative fair value. Then for inventory or investment property under fair value model, the entire amount is accounted as inventory or investment property. Then what if the building is unusable but likely to be demolished right away? So, we allocate na to ang purchase price between another common cost between sa land and old building using their relative fair values. And then, i-allocate po na to ang cost of old building to as charge to loss because it will not generate a future economic benefit naman good and it is unrecoverable. So, that's all.